And thanks for joining us for MarketBeat Monday. We are glad that you joined us for a day with a major whiplash in the market. We are going to get right to that whiplash reaction this Monday with our MarketBeat analysts, Chris Markoch and Thomas Hughes. Guys, thanks again for always bringing here on our live stream to give a live look at some of the stocks that our viewers want to talk about, and also just look at how the market's starting out this week and what we're watching this week as far as other potential market movers to come. We're going to dive into all of that. If you've not been with us for a MarketBeat Monday live stream before, welcome. I'm so glad you're here for your first time. Put in the chat any of the stocks you want to talk about. A lot of people put suggestions in there. We have a lot of people who join us every week, so I won't be able to get to all of them. If you have something you really want Chris and Thomas to take a look at, try a super chat. It's a great way to get my attention and make sure that we'll talk about the stock too, but I'll get to as many as we can. And Chris and Thomas, I want to get started right away because it's the whiplash of the market is what everyone wants us to talk about. We started the market out in so much red today, and then I'm just pulling up the heat map now where a whole bunch of the market is ending in green really strongly, actually. Talk about what happened today, Thomas.
Well, right. So we started off with just a continuation of last week's war-induced selling. But then late in the day, President Trump came out and commented and said the war might not be all that long. And the market took it as good news and started buying on the dip. What I'm seeing in the charts, though, is that the market is showing support at the 150-day moving average, which to me is a trend following signal. This is ultimately a good day for the market. We closed with a small gain, set up to advance again. So now we're just looking ahead to see maybe there's some more volatility, but I will not be surprised to see the index retesting the all-time highs pretty soon, within the next couple of weeks maybe, and even moving up to set a new high.
Yeah, Chris, I want to hear from you too. Talk about how much we dropped this morning. I mean, it was a fairly significant drop in the first few hours of trading today.
Well, yeah, and if you go back to last night, at one point last night in the futures market, the Dow was down over 1,000 points. And I know early this morning, pre-market, it was down about 500, so it cut that in half. And then when the market opened, it was down around 400, 300, and you started getting a sense that there might be some bullish momentum coming. But certainly it was just, all it took was that signal from the president that there might be an end date to the conflicts with Iran sooner rather than later, that really goosed the market, because nobody wants to be offside when that happens.
Yeah, absolutely. And let's talk about the turnaround. So, Thomas, you already talked about that a little bit, about the Trump saying that the war won't last as long as some are expecting, and that turned the market right around. The other thing we haven't talked about yet is oil. I know that a lot of this started because that price of oil up over 100 over the weekend, and we saw that come down today too. What's behind some of the oil changes that we saw?
Well, I mean, oil did the exact opposite of what the S&P 500 did, which was to open with a gap higher, move up to a new high, completely above the 110 level, and then it did an about face and sold off real hard, closed with a loss. So that's showing me that the market hit its ceiling, which is in the $100 to 110 level, which people have been talking about for weeks as this thing was building up, that oil was going to top $100, and it did. So when it did, they took profits. Now it looks like there's a top in the market that could be pretty solid just based on the size of the candle.
Yeah, I think so. Another thing, we had a question from one of our regular viewers talking about the Korean markets dropping about 20% today, and they didn't see as much of a recovery. It's not just the U.S. markets that are reacting on oil. This is kind of a global story in the market.
Well, right. As we were talking about, before the show started, South Korea is real sensitive to oil prices. They get most of their oil from the Gulf. So if the straits are closed and oil is being blocked, not only is the price going up, they're just not going to have it. And so that's going to be a real problem for their economy. And that's why their market sold off. But I would say that's probably a real good opportunity for investors in their country to start buying some of their favorite stocks, because the problem won't last forever. Their economy will bounce back pretty quickly. And so I think that, yeah, for sure, a buying opportunity.
One more quick question on this, because I think it's interesting that this is a global story. Of course, we focus so much on the S&P 500, the U.S. markets out there, but we've also talked about the importance of diversification. So maybe some viewers out there are also diversifying into some other foreign markets out in different markets. Does this oil story impact many different countries and many different types of markets?
Oh, absolutely. I mean, it would be right now. It has potentially very negative results for China if the Straits of Hormuz are closed for any length of time. And I know they're technically not closed, but for all intents and purposes, they're closed.
Right.
We obviously said Korea and probably a lot of the other, Eastern countries there that would be affected. I know Europe is going to have issues as far as natural gas is concerned. And right now, it would tend. I agree with you, Bridget, that normally I would say diversification in different emerging markets is a good strategy. But when it comes to energy right now, the U.S. is probably the place to be until things settle down.
Solid advice. I did have one. We have quite a few different stocks we want to get to already that we're already ready to talk about, but somebody had an interesting one in the oil conversation to look at. This looks like a short. So this is SCO. It's the ProShares Ultra Short Bloomberg Crude Oil.
Oh, right.
Yeah, talk about, what do you know about that one, Thomas? I'm looking at it right now.
This is a trading vehicle. So if you think that oil prices are going to fall, then you would buy this. Excuse me. This is a way for people that aren't able to short oil because it's a future, a commodity. It takes a specialized account and a lot of experience, a fair amount of bravery to do those kind of things. But you can buy this, get the same kind of exposure, less amount of risk for traders. You can buy it in small amounts. But based on where oil prices could be going and where this chart is, it looks like it's down around 10. I mean, we could get up to 100% increase on this. So you trade this and short term for profits, basically.
Right.
Yeah, interesting. Well, thank you for commenting on that one really quick. Well, let's get to some of the names. We've got a lot of different names coming in from all of the people in the chat. And again, thanks for all of those who are here with us regularly. We love to see some of the same names popping up. We also love to see new people joining us. If you have not subscribed to MarketBeat yet, this is a big deal. We love to hear from people who are subscribed to the channel, who are here watching all the time. So if you haven't done that yet, make sure to subscribe. You can hit the button on the side. I'm just going to pop this up really quick here too. If you haven't subscribed yet, we have a link on there so you can do that really quick. It helps us out just to get more people exposed to the channel, have more people join the chat, and I love to hear all the different stock ideas that come from people who watch. I also love to see the number of countries we have viewers coming from. So thanks to everybody watching from all around the globe. That's what I love about MarketBeat Mondays. We have people from everywhere, so thanks for being here. All right, let's get to some of the stocks that you guys are asking about. A couple people already asked about this one. We knew they would. Let's talk about AMPX, Thomas, and let's see how high this one has been flying. This is one you've been early on for a while, and it's great to see the success the stock has had in the last couple of days.
Well, right. So this is a story that's been building for years. Their technology, getting their production ramped up, slight strategy shift last year. The report just before this last one was good news and set us up for this report. There was some volatility in between then and now, but the report absolutely 100% affirmed this robust outlook for this battery disrupting company. So revenue and earnings were outperformance. Guidance was outperformance. The growing backlog suggests continued strength. Highlights for the last few weeks are expanding its production capacity, improving its capacity for NDAA compliance so it can meet even more government demand, which is really driving its business right now. And in the charts, what I see right now is clear textbook bull case scenario. We've got rising volume ramping to a record high. We've got the indicators converging with the new high, bullish across multiple time frames, daily, weekly, and monthly charts, all pointing to new highs. Today, the market advanced another 7%, moved to long-term highs, broke above last week's high. Just really a bull case, and one that I'm going to be happy to watch for the next few quarters and years as this develops, I think.
Yeah, again, this is one you've been following for months. We started talking about this early last summer. So this has been on our radar for a long time, since when it was under $4 or right at $4. So it's grown so much since then. Looking at the chart for this one, I also think it stands out that this one is up 758% in a year. So this has been such a great stock for those who did get in early on AMPX. And I think the question that we had in the chat too is, how much further can it go? Where do we see this stock going? And I think you can see that in some of those analyst revisions coming out on this stock already. I know we had a few after that earnings report. We had a few others coming out with higher, moving this price targets even higher. But I think even after we were up 36% in the last couple of days, the stock is still trading under consensus, which I think says a lot about the future.
So there's like a near term and a long term outlook in this one. The near term is, in the low 20s. Those analyst revisions are to the $20-$21 range, and that puts it up into the middle of what I will say is my next target range. The last couple of quarters, it looked like the stock was starting to enter a channel, but this last couple of days, the stock has soared to the top of the channel and is now breaking through it. So I think now what's going to happen is we're going to enter into a new higher channel. So this market could get as high as $25 within the next few weeks, few months in this scenario to get to the top of that channel. But then longer term, with the growth vector, the potential for this technology to eventually spill over from government and defense into a broader array of sectors, disrupt the entire battery market, we're talking quadruple digit gains over time. I think this is a long-term growth story, earnings story. It's just it's going to take a long time for this one to play out.
Yeah, this
something I noticed on that, Bridget, is that to support what Thomas is just saying about this is a very early play. I mean, institutional ownership is only about 5%.
Right. Totally.
And I mean, I understand why, because the company's not profitable yet, blah, blah, blah. Right. But I mean, when they start getting involved, I mean, the heavy lift was from $5 to $10, right? That's 100% gain. The growth from 17 to 25, that's not as heavy of a lift. And when you start getting institutional money involved, that's not that heavy of a lift at all.
I think, Chris is getting to this point where this market is just getting to the point where the institutions are going to start buying it aggressively, because ownership is real low still, but they have been accumulating it at, I got to look at the data, it gets like $4 or $5 to one they sold. So pretty aggressively, but still low amount. But this last report affirms the outlook. It kind of de-risks the outlook for them. It's still a risky stock, but it's less risky than it was. So I'm going to also be looking to see institutional activity pick up, not only the pace, but the balance of activities, so that, we're actually accumulating the stock and not just rotating within that 5%.
I think it's super interesting. And I know Chris and I just had a video come out yesterday talking about another battery stock. We talked about AMPX last June. It's grown so much. There's so much demand for this battery sector, especially any battery company having to deal with drones. I know, Chris, you shared another really tiny, I think this stock right now is around that $1.50 mark, that has potential to grow as this interest in other innovative battery companies comes into play, especially for anything related to batteries and defense. So go back and watch Sunday's video on our channel if you haven't caught that yet. There's a few other really great stocks to look at there. Chris, I do want to move on because we've got so many different things to talk about, and I kind of introed where I'm heading here. I want to talk about defense a little bit. So Thomas, I'm going to have you talk about AVAV. I know the earnings are coming up for that one. We want to talk about some of the smaller ones and the bigger companies. But Chris, let's just get started with the big ones, Lockheed and Northrop. Even though the day finished green for most of the market, it looks like defense is still struggling a little bit.
Yeah, so this morning I noticed that the big names, like you said, like LMT, like Northrop Grumman, RTX, it was kind of a mixed bag. Some were up, some were down, and they all finished the day in the red. I think, again, some of that was just a reaction to the headline, right? If the administration is saying that the conflict is going to end sooner rather than later, that would mean we're not going to need as many bombs and drones and other things to carry out those operations. However, as we were talking about before we started taping today, there's going to be the need to replenish that supply that we've gone through. The defense contractors have already been talking to the Trump administration, saying they are pledging to triple and quadruple their output. The word is that the Pentagon is going to be going to Congress and asking for an emergency $50 billion supplemental funding to pay for the operations that have been going on so far. And then there's the larger picture of a Pentagon budget that's expected to be $1 trillion for next year. As a matter of fact, I think I heard a number of 1.5 trillion. So there's no doubt that spending is going to continue, and these big companies are going to get a lion's share of that funding.
I think that's good to look at. I also want to look at some of the smaller companies. I know somebody mentioned the smaller drone companies. We talked a lot about DPRO, Dragonfly on MarketBeat. That one looked like it dipped today. I'm going to pull that up with some of the others. So that one was down a little bit today, down about 4% today. But then it's kind of going along with the other drone stock categories. You've got Red Cat down almost 10% today, and that one had been soaring really high in recent days. So just kind of a turnaround happening in this sector that in the last week or so have really seen an increase before that. Ondas is another one, ONDS, that was down a little bit today. Is this profit taking? Is it reaction to the headlines? What do you think?
My guess is a little bit of both. I think it's a little bit of profit taking because of the headline, and people are just saying, you know what, let me take some of the gain I got and stick with it. I don't think there's anything fundamentally wrong with the story with any of these companies. We just mentioned with Ondas that they've got a Thomas, you said it better than I did. What Ondas has with the government, and then of course Red Cat's in that area of drones. That's exactly the type of technology that the Pentagon wants to be funding, and that Congress wants the Pentagon to be funding. So with a lot of these small defense stocks, I don't see anything wrong with the longer term narrative. It's just, I think today was just a little bit of, let's take some profits after a nice big week last week, and then we'll live to fight another day.
Yeah, I wanted to share this really quick. When I'm looking at just short interest on Ondas, short interest is almost 36% of the float. So that's pretty high for.
I think Ondas and some of these other drone stocks might be setting up for some short squeezes. Certainly were some concerns, getting them pressured to lows, but the longer term outlook is pretty solid, I think.
I think that's true. Short interest on Dragonfly right now is 79%. That's a lot. All right. Looking at those, let's talk about AVAV. It's also kind of in that same defense sector. Thomas, what's going on with this one?
Well, this one's got a company-specific problem, whereas one of its contracts was reopened. So with the Space Force, it was the SCAR program, was really a major part of its backlog, but it was reopened so they could diversify their supply chain. Possibly for AVAV, it means losing the contract. So that's a hit for their future revenue outlook. Stock price is down real hard, but it does look like we're at a bottom. We hit the moving average. We've rebounded. Support is evident in alignment with 2024 highs. So it may take a little while for the company to kind of regain some confidence, but I would expect to see this one rebounding.
Yeah, that was the question on this one, is that it's down 40% from its highs. And if you look at what analyst forecasts are saying, they're still predicting a pretty strong upside for this. And we haven't seen too many price target reductions for this one.
So some good news will go a long way with this one. So they're expecting to report pretty soon. But right now, the bar has been set really low. 100% of analysts have been lowering their targets. So even though we're expecting growth to accelerate, we're going to possibly see some significant outperformance just because of how low the bar has been set. The risk is that maybe they do report badly. In that case, the stock price will probably wallow. But given the potential for outperformance and strength in the sector and the long-term outlook, potential for the stock or the company to have picked up another contract to offset this one that they're losing could really reinvigorate this market.
Very good. All right, we're going to go back to some of the very first requests that we had when we started this live stream today. We want to talk about JMIA. This is Jumia Technologies. And then I'm also going to talk about TMC, the metals. And then we'll talk about HLX, Helix Energy Solutions Group. These are some of the earliest requests on the live stream today. So let's just jump through those really quick. I'm pulling up Jumia first. Chris or Thomas, who wants to talk about that one?
Yeah, Jumia seems like a fine play. It's e-commerce. It's emerging markets. It's in Africa, so maybe it's got a little bit more risk than some other emerging markets, but still looks pretty well positioned. The stock price appears to be in this transition phase where it appears to be getting some more support. Expecting some good news to come out. Maybe the upcoming report release could potentially, trigger some more buying. But it seems like a pretty decent play.
I think what's interesting, what really stands out is how bullish. I mean, obviously it's a smaller company. There's not a ton of analyst coverage, but of the analysts who are covering it, they're all looking for it to be about a double from where it's at right now. I think on the low end, the projections are $15 for this one.
All right. Well, that's just the potential for e-commerce. So we're in a region where you've got not only industrialization and increasing middle class, but a middle class that's becoming wealthier and one that's becoming more and more digitized with more and more penetration of digital services. So there's a lot of tailwinds for the business. It's just a matter of time for them to execute and to capture all the revenue and the earnings.
And just to oversimplify this is kind of like the Amazon of Africa, right? This is like a retailer
Basically.
like Amazon, right?
Right. Yeah, and it may be even more closely related to like Mercado Libre, which is really aggressively investing in the infrastructure to get the products to the people. So even before the people are there with the digital tools to want to buy the products, they're creating the ability to put the products to the people. So all they have to do then is just help the people get the digital tools to then buy the products. Sounds complicated, but it's been working for them.
Yeah. Good. All right, well, let's move on to the other two that we had mentioned. So TMC, the metals.
Yeah.
What is this one, Chris?
Yeah, so this is one I think we've talked about on MarketBeat Monday before. So this is a deep sea minerals exploration company. Now, we had a question come in about news that broke about the company, and I think that news makes this stock a lot more investable today than maybe it was before then, and that is that the company has received word, I guess, news from the National Oceanic and Atmospheric Administration that their mining application is in compliance with federal requirements, and that means that they can start drilling, they can start exploring and recovery for these polymetallic nodules in the deep sea. So it's bullish, certainly, for the company. This is a pre-revenue company. It's not profitable. So now they're going to be probably commencing operations. I don't know how soon, but certainly that's something to watch. I think much like we just had that story with AMPX, not very much institutional interest in this company for obvious reasons. Again, it's a pre-revenue company. But if I look over the last month, there's been a lot of institutional money going into it, at least from a historical perspective. It's a lot of money compared to what was going in it. And news like this is probably going to be something that's going to be getting that institutional money a little bit more interested in this company. This is a play not just on copper, but it's also nickel and cobalt and manganese. So this is a company to watch, certainly.
Yeah, this is one of those rare earth companies out there. And we've been talking a lot about those even more and more now. We were talking about battery stocks earlier. I had a really interesting interview with somebody on the channel who is in engineering for another company that's doing rare earth mining of different magnets that are used in so many different products and batteries and things like that. So if you haven't caught that interview yet, go back on the channel and watch it. It's talking about defense stocks have a rare earth problem. It's a fascinating conversation from an engineer's perspective. Another thing to talk about with these rare earth companies is that there's so much so many new companies coming out, and I think that there's just going to continue. We're going to continue to see that. We're going to continue to see new companies coming to the surface with rare earth story in North America kind of expanding. And so, if you have not seen this report yet, this is one of Thomas's brand new special reports. This is on the. Sorry about that. I've got too many things here. This is on the 7 hottest IPOs for to watch in 2026, and I really like this report. Again, if you haven't seen it yet, it's absolutely worth watching because it has a lot of different stocks out there that a lot of Wall Street is watching right now to IPO this year. And these are the kind of stocks that often come up in MarketBeat Monday, these brand new IPO companies that see a ton of interest right away. Some of them continue to grow, some crash right after that IPO, but a lot of the eyes of Wall Street are waiting for these companies to go public in 2026. You can scan that QR code. We're going to put the link in the comments too, so you can check that one out and get another list of different stocks or companies to watch for going public this year. All right, let's get on to some other names. We've got so many more coming in the comments. I love to see it. I'm trying to get some of the earliest ones in first, and then we'll get on to some of the new ones that are popping up. Let's talk about Helix Energy Group, HLX. Thomas, do you want to take that one?
Yeah, this is an energy services company. It seems to have been doing well early in the year, but it reached a peak recently. Looks like this pullback is turning into a buying opportunity. Right now, we're looking for revenue growth to continue, but we are still pre-profits. Profits have been pretty spotty. One of the catalysts for this one will be more sustainable and regular profitability. But as an oil field services company and an exploration focused one, it is certainly well positioned for the future of energy.
Yeah, very good. I think the one thing in here, follow up to ask, is it had that big pop just a couple of weeks ago and then lost everything that it gained. Why was that? Do you know what's behind that?
I'm trying to find February. It
Thomas,
looks like,
hold on, Thomas. Yeah. Chris, I'm going to have you look up. No, we just did TMC the metals. I'm going to have you look up SoFi. We've got lots of people asking about SoFi today, okay. Chris, so you can look at that.
Okay.
Did you find out the reason for this little pop that happened?
Well, yeah, there was an earnings release where they had some outperformance, but I think that there were some near-term headwinds that emerged. I'm trying to see if I can figure out what that is. But at the same time, analysts, moderate buy, 16%. Oh, yeah, so not a lot of coverage. Not a lot. Yeah. Institutions seem to like it, though. 90% ownership. They've been buying on balance. It might just be the fact that there's not a lot of analyst interest, so there's not a lot of retail investors kind of following this stock. So in this case, where price action really ran up and spiked, the institutions probably caused that to happen. But then being who they are, they probably stopped buying, let the price fall back down to where it is. Now that we're back down to the moving averages, I would not be surprised to see them start buying again. Keep the stock, moving sideways, potentially moving higher until the retail market finds a reason to want to buy it, and then that's what will start driving it, really higher over time.
All right, very good. Well, I know we had a couple people ask about HIMS. So Thomas, you can take a look at that. It looks like there was some movement in that stock today. So look at HIMS. Let's look at Chris. Let's talk about SoFi. This is one that comes up almost every week. It's hard to know if we should cover it or not, if there's ever any changes in it. So has there been a change this week or not much?
Well, there's been some news, and I don't know. It's probably too early to tell whether or not that's going to be bullish or not for the stock. Last week, the company announced. Let's see. I want to make sure I get my dates correct here. So, So both of these announcements happened late last week. One was they announced that they're partnering with a company called Templum to have a limited time private market investment window for accredited investors to access 3 specific companies, including OpenAI, through what's called the Cosmos Fund. That window for that trade started on March 5th and it's going to end on March 30th. So that's one piece of news. The other one is that SoFi is partnered with MasterCard to roll out the SoFi stablecoin. So, so again, both of those pieces of news came out late last week. It doesn't look like it had that much impact on the stock itself. Stock's up about 0.5% in the last 5 days. Don't really know if either one of those announcements is going to be a major mover for the stock.
Yeah.
You know, my opinion about SoFi really hasn't changed. I think it's I would say I think it's a buy. I think it's being kind of lumped in with a lot of the other financial stocks, and I understand that some people would say, well, you can't have it both ways. You're either a bank or you're not, and if you're a bank, you get lumped in with the banks. But I think SoFi is worth a higher premium than what it's getting right now. But I don't think the news that I've seen this week is necessarily going to be market moving. But I certainly think that the stock on its own, you know, has more to go.
You kind of answered this, but one of the specific questions in the chat was, is SoFi a bargain at these prices? And looking at the analyst forecast right now, looking at consensus price target of 40% upside, on the high side, quite a bit higher. And looking at some of the recent analyst price targets, there were a couple of price revisions a little bit lower, but there's still plenty of recent price targets well into the 30s for this stock.
Right. So what I would say is I think this is a beauty is in the eye of the beholder thing. I mean, I think it depends on how you view the company. If you're looking at SoFi and saying it's a bank stock, then you're paying an awfully high premium for a bank stock. The PE, I think the PE right now is the 40s, forward PE is like 72. So certainly it's a premium. You're paying a premium for the stock if that's what you believe it is. If you believe that it's more of a technology company and it's got a lot more of products that are going to be more sticky with a younger consumer and with the digital economy, then yes, it might be a steal at this price. Let's split the difference and say I think there's more growth to come. I'm not sure exactly where the final upside is, but I'm more inclined to lean in where the consensus price target is than to say that it's overpriced right now.
All right, Chris, I'm going to have you look up another one. It looks like this one popped almost 250% today.
Wow.
This is GSIW. Thanks for that one.
Okay.
I've seen it in the chat a couple of times. So you look up that one. Thomas, let's talk about HIMS. What's happening with that one?
Well, HIMS rose by 41% today.
Wow.
I'm kind of surprised that it didn't increase by more, because what happened is that they reached a deal with Novo Nordisk that ended the lawsuit. And so now HIMS is going to be able to start selling Novo's GLP-1 drugs. So this pretty much puts HIMS back where it was before all of this hoopla started. So to me, this stock could go back to $60. So that's 200% upside from where we are right now.
That's a pretty bold claim to say that it's going to go right back to where it was. Was that really the only change that had HIMS moving so much lower the way it has been the last few months? Is it just that one lawsuit?
That's the factor that was cutting into its revenue and earnings outlook, even though it was still expanding its other offerings. So now it's got its expanded other offerings, plus this GLP-1 thing has been resolved. So maybe it takes a little bit of time, but I think this market's going to climb back up to its high levels.
Yeah, I've got the earnings data pulled up right now too, and it looks like it was a late February earnings that they did really, really well. And I know everybody cares about what the future earnings outlook is too, but it looks like that they're doing well so far.
Yeah, I mean they've been doing good so far as I know. I mean, when I read the reports, it sounds like they're expanding their services and they're deepening penetration and they're becoming more of a full service health company. So there was a little bit of weakness in the guidance. But still a strong guide. I mean, not as hot as expected, but still looking for double-digit growth is good. So with the addition of GLP-1s, I think that we're looking for guidance improvements and outperformance and a bullish analyst cycle getting ready to unfold.
All right, a couple of follow-ups and questions on this one because I think it's an interesting story. One, you kind of already said this, so it sounds like you think that this is going to continue to move higher. So if you miss the pop today, there's a potential for the stock to continue to move higher in the future. That's what you're looking at anyway. I think for HIMS in particular, many retail investors were very bullish on this company early on, and then they've just been burned by it. You look at the chart for this one, and you can see the volatility in there. There's
Right.
definitely some investors who've been burned. Can a stock that's had this kind of volatile history turn into a less volatile story, and what will that take?
It'll take increased ownership to reduce the volatility, to get more buy and hold investors. So, more institutions, more long-term holders, and that really comes down to really growing into its growth outlook, establishing its cash flow in a really reliable way, and then starting some capital returns, buybacks or dividends or something like that.
All right, very good. I'm going to have you look into VRT next, Thomas. Let's look at that. VRT. And then greetings from Uruguay. I love that. I think that's the first time I've heard Uruguay on the live stream before. So thanks for watching from Uruguay. That's awesome. Okay, Chris, let's talk about where you are, what you're looking at again. This is the one that had the big jump, right?
Yeah, I'm looking at Garden Stage Limited. If GSIW was the stock ticker you gave me.
Yes.
Yeah, so stock was up, let's see, 161% today.
Wow.
I think maybe at one point it might have been up a little bit higher, and that looks like it gave up some of those gains a little bit towards the end of the day. I'm trying to figure out the reason why, and I think I know. I think it's tied to a reverse stock split that they did on March the 5th. They did a 1-for-200 split. I'm a little uncertain about that because those don't necessarily lead to a stock jumping, but it seems like the short interest in the stock was high enough that when they did the reverse split, you had some people that were trying to cover short positions, and so the stock surged a little bit. I'm just surprised that it took till today for the market to catch up to that. It started doing it looks like on the 5th, and then it really took off this morning. So I was trying to see if there was any additional catalyst today to spark that. I don't see that. Interested, let us know if there's something that I'm missing, but it all seems to be tied back to that reverse stock split that they made on the 5th.
Okay, and I'm looking at this one, just the quick. Again, this is a fresh look. If you've not been to MarketBeat Monday, we're just giving a fresh look to a random stock ticker that someone in the chat said. So we don't know anything about this company other than a quick look at it. But looking quickly at the description of this company, it seems like one of those companies that is ambiguous as to what it does, right? It owns different securities, deals with brokerage, underwriting securities, a little bit of everything. It looks like it's based in Hong Kong. So I'm curious about what could have led to, and it's a tiny company, $6 million market cap. So this is really
it's referred to as a China-based consulting services company, which again that's sufficiently ambiguous for me. But yeah, I saw reverse stock split, and again, those don't normally mean bullish. Those actually usually are bearish for a stock, but it looks like it was a stock that had high short interest. So this is probably the result of some short covering that's happening. Speculative stock to me, and again, not one that I ever heard of before you just asked me to look at it. So
yeah, it looks like trading got paused on that one a couple of times today too.
It did, yeah.
Yeah, interesting name. All right, something new to look at. Okay, I think I'm going to have you look at, gosh, there's so many different ones out there. Let's look at PED. This one looks interesting.
Okay.
So look at PED first, and then Thomas, you were looking at
Vertiv.
Yes.
Right. And so this company is manufacturing and servicing data center and communications infrastructure. So it seems to be pretty well positioned. The stock chart is looking pretty hot right now. We just broke out of a consolidation. So this looks like a continuation of a strong rally, about halfway over, maybe a little bit more. One of the drivers is inclusion in the S&P 500. in the data center business, which is driving its growth. Let's see.
We've talked about Vertiv on the channel before. It's absolutely come up in a few different stories, I think usually related to the AI infrastructure build out, right?
Right.
I also, this chart growth on this one is wild to see, 200% growth in a year, 1,200% growth over the last 5 years. So clearly
Right.
growing alongside that AI story.
Well, being driven by growth, but also analyst trends. You look at the consensus target is up almost 100% in the last year. It is definitely being led to new highs, driven to new highs by the analysts. So it looks like a pretty strong movement to me right now.
All right, very good. Is this one an entry where it's at right now? I think that's the next question. It's trading pretty high. I mean, clearly it's had a really strong year. Is this a momentum play where you chase that momentum higher?
This could be a momentum play, but I hate to chase prices. It looks like it just came off of a buying signal, so I would want to see a pullback because up 10% today, it's extended from where I would want to be buying it. So watch this one. I think it's going to have a significant movement, so there's probably going to be some pullbacks to where you can kind of maximize your entry. But just kind of whatever your risk tolerance is.
That is always the question, right? Whatever your risk tolerance is. Let's go back to a defense stock for you. If you want to look at BKSY, it looks like there's a few different stocks in the same sector to kind of look at: BKSY, EVTL, and ARDX. But let's start with BKSY.
All right.
And look at those. Okay, Chris, which one are you looking at?
PED was the ticker symbol.
Yes, that's right.
Pedevco. I don't exactly know how you pronounce it.
Oh, this is penny stock territory.
This is a really old penny. This is an actual penny stock.
Yes.
Closed today at 77 cents per share. So this is a oil and gas exploration company. So the company is headquartered. It's headquartered in Houston. Its asset portfolio is concentrated in the onshore U.S. oil and gas basins. So the one thing I see here is that today it was announced that they were doing a 1-for-20 reverse stock split. Stock up about 0.26% today. Looks like it was trading pretty much in line with the rest of the energy sector. Don't really know how the market's going to react to that news, or if today's slide was due to that news. They certainly had a lot more. They certainly had a lot more volume today than they normally do. Almost 6 times the number of the volume that they normally have. But I'm not. I don't know for sure. Like I said, if it's going to have to wait and see what happens over the next couple of days to see how the market digests that reverse stock split. Again, reverse stock splits are generally not considered to be bullish indicators, but if it's going to be, especially since if they did the 1-for-20 split and the stock is still at 77 cents, that's a bit of a concern.
Yeah. All right. Well, a good quick look at that one. We've got so many other good names here to look at to check in on that we haven't in a while. One that is just a random name we haven't actually covered in a long time. It's Hertz. So want to look at Hertz stock. So I think that's an interesting one to look up. So I'll have you look up that one and then also look up Rocket Lab at the same time just to see what's interesting in both of those stories. Thomas, which one are you looking at?
Black Sky, BKSY.
Yes.
So this is an AI-powered, space-based intelligence company, providing software and data driven by a satellite constellation. It's very small. It's making about 35 million the last report. This is pre-earnings, but this year we're looking for increased adoption, so that may drive an improving outlook. Right now, we're not looking for profitability until 2029, so that would be a headwind for this company. Revenue growth pace is, fair, substantial. We're looking, low 20% CAGR for the next few years. So again, the catalyst for this one's going to be evidence of adoption and accelerating adoption, which may come out in the subsequent reports. Right now, it looks like the market is building up a support base and preparing for a movement. So there could be some good news coming down the pipe.
I do want to point out with this one too, looking at the analyst price targets, the range is pretty high on those price targets. So they go up as high as 42, but that's pretty recent. That was just February 27th, so just a week or two ago. There was a price target of $42 set on this stock that's currently at 25. So
6, right? 6, and now we're 26. Yeah, there's some mixed sentiment, but generally speaking, analysts look pretty bullish. Certainly are providing support and some incentives. So, yeah, it looks pretty good.
All right, very good.